Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. Welcome to all of you. Glad to have you here with us. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined by my good friend Connie Hill out there in the chat. Keep her busy today. Keep her asking her some questions. Be a part of the conversation. We're going to talk a little bit about some of the moves that have been happening today and over the course of the last week. Just got back from doing a technical analysis and option strategies workshop in Seattle this last weekend. We're going to be in Sacramento this coming weekend. I met some of you that are here with us for the first time and some of you that are here with us on a regular basis. It was great to meet all of you. Look forward to seeing some of you or all of you out in those live events around the country. But thanks for joining us today. So we're going to jump in here real quick and take a look at what's going on, but a couple of quick housekeeping items that we want to take care of. First of all, remember that everything we talk about is simply for illustrative and educational purposes only. It is not any kind of recommendation or advice. Remember that when you trade futures and futures options, that trading involves substantial risk. It's not suitable for all investors. It's highly leveraged. There's separate trading authorization that's required. Make sure that you read the risk disclosure statement for futures and options prior to considering any futures transaction. Also, remember that futures options require a futures margin, which is also known as a performance bond. That futures margin is an amount of funds required to initiate and or maintain a futures position. So be aware of those circumstances. If you've got questions about that, I'm going to show you some resources about where you can go to find more information about those ideas. Also, when we start to talk about things like, and I don't know that we will today, but when we do virtual currency derivatives, make sure that you understand that trading involves unique and significant risks. Those products are digital representations, or those virtual currencies that those futures products represent are digital representations of value. They're not legal tender. There are some special risks that come with that. There are a couple of advisories that you want to make sure that you pay attention to. The NFA Investor Advisory and the CFTC Customer Advisory around those products so that you understand what those products are. Now, we're going to be using the thinkorswim desktop software platform today, specifically the paper money version. It's not a guarantee of future success. It's a great learning environment. However, it doesn't do certain things that a live trading account will do. Fill prices are oftentimes better or at a specific price that you wouldn't necessarily get in a live trading account. But just so you are aware of those things before, as you move your practice from paper trading to live trading, that there are some differences. We're going to use a lot of technical analysis today. Not the only way to look at the market. It is simply one of the ways to look at the market. Technical analysis, probability analysis, fundamental analysis, those are all theoretical in nature. None of those are guarantees as to what is or isn't going to happen. Now, we're going to talk about putting some trades together, some trade ideas together here this morning, in addition to using the market as kind of a measure of what's going on, the futures market. But when we talk about orders, specifically stop orders in futures products work a little bit differently than in, say, for instance, the equities market. When we initiate a stop order and in an equity and that order gets triggered, it gets submitted as a market or marketable order to the market. That suggests the next available price, and that next available price may be significantly different than what was expected. Because of the nature of futures markets and because they can move quickly, any order, buy stop or sell stop, that is submitted as a stop market order will get worked or substituted by the exchange as an exchange designated limit order within a particular range, typically referred to as a protection band or a protection point or a protection range. If price moves before that order gets filled outside of that range, just like a stop limit order, that order may get rejected or may not fill. So there is the possibility, even with a stop, what a trader thinks is a stop market order, that order gets worked as an exchange designated limit order and that order does not fill. So just be aware of that fact, that stop orders are not guarantees. Not guarantees of where the price is going to get, or the order is going to get filled. And in the case of futures market may not be a guarantee that the order gets filled at all. So just so that we're aware of that, let's pop over to the Thinkorswim platform and jump into this discussion as it's moving. Taking a look at a particular idea here this morning that I wanted to talk about last week, didn't really get a chance to, but I've been watching some moves. We've seen some changes in the Japanese yen market recently, and a lot of this has to do a lot of what goes on with the Japanese yen market. The symbol here is /6J. This Japanese yen future contract has a lot to do with interest rate differentials, simply between U.S. Treasury rates and Japanese Treasury rates. These yen futures /6J typically tend to fall when U.S. Treasury yields rise relative to those Japanese bond yields. Japanese bond yields have been skyrocketing, but U.S. bond yields have been rising a little bit as well. So there is kind of some intermarket relationship there. This is also a function of the carry trade. We've talked a little bit about the carry trade before, buying currency in one market and selling currency in another market to profit from that interest differential. Let's ask the question. So last year, Japanese yen fell and the U.S. market did too. If that happens again, that was that carry trade unwind, right? The Japanese central bank tends to be more defensive of their currency. They tend to come in and defend that currency down around a particular level, down around this 0.0062 level or so tends to be a line that they defend. Recently, the line that they've been defending has been a little bit higher. That means they'll come in and they'll buy the currency up and they'll push that price back up to maintain the strength of that currency. So dollars and yen don't necessarily work absolutely in opposition to one another. Dollars and yen don't work in direct correlation to one another. There is a little bit of a difference here, and especially when things are going on. So bond yields have been rising. That's been driving the yen down. And in fact, we've seen that yen drop as it started to make a little bit of a reversal pattern. So for some of us that are technically inclined, looking at this might be looking at a double bottom type of price pattern. So pulling back into a level of support, rallying back up to a level of resistance, pulling back into a level of support, and then rallying back up to the upside, and now seeing that pull back from what was that kind of central resistance level of this reversal pattern. That would not necessarily invalidate the reversal pattern to see the yen move to the upside, but it certainly suggests that there's some weakness here in the yen. So on the right-hand side of the chart, this is the 1-year daily chart on the right-hand side of the chart. On the left-hand side. Right-hand side of the chart, what I was looking at here was this downward move, bounced down from this resistance in the short term at about 0.006495, found a bit of a support level here at 0.006434, dropped and rallied. So what I was looking at as I was getting started here this morning was kind of this area right here as a bit of a bear flag. Now, in putting this trade together, here's what I was looking for. I was looking at duplicating that move, this resistance to support move, to the downside. So looking at entering, here's how I've got the trade, or would like to structure this short-term flag trade. And I'll just put these numbers in, or these levels in. So this would be my entry point, would be a sell stop below that 0.00643 level. The target then on that move would be down to this symmetrical move from this kind of bear flag pattern down to this level right here at about 0.0064. And then the stop on this trade, let me kind of zoom back out just a little bit. The stop on this trade might very well be right back up here where we saw this level of support, which is now potentially support again, but was potentially an area of resistance. So looking at that being the stop. So stopping this out if it goes against pretty quick, it's not now at the point where it gives us a valid entry. We may think about reversing this if this continues to move back to the upside. But this is, I'm still looking at the trend direction. First of all, longer term trend direction is down. Intermediate term trend direction from this resistance level up here at about 0.06557 is down. And the trend direction over the shorter term, so this is today's 5-minute trading, that trend direction is down. So still looking at this in a downward direction. And again, at some point you can look at all of these intermarket relationships. You can look at all of the data from the standpoint of what are interest rates doing and so forth. What then really matters is, that gives you a kind of general opinion. What then really matters is what those technicals are doing in terms of where the yen hits the road here, if you will, because that's where the transactional momentum is going on. So I've got an ADX on here. This is the directional momentum indicator, right? So whenever this ADX level is above about 25 or so, that generally indicates a strong trend direction, whatever direction price is moving. The ADX is agnostic to direction. It is simply indicative of trend strength. So if you've got a bullish trend in the stock and the ADX is above, or on the futures product and the ADX is above 25, that's a fairly strong uptrend. If you've got a downward trend and the ADX is above 25, you've got a fairly strong downtrend. So it's one of those indicators that kind of works both ways in that respect. So at this particular point, that's starting to rally up against us, and it's doing it with some strength. So we may not get this order filled, but I still think there is some validity in this potential move to the downside. Now, I would argue that this might be one that we could set up kind of the dual nature of a trade like this, a trade idea like this, in that bounce is if this breaks up above this resistance level, perhaps here at about this 0.006441 level, that may be a bullish trade in this particular case. And looking for this to move in a bullish direction and then stopping this out, just reversing positions on this stop and this entry point. One of the things about futures contracts, and we've talked about this recently, is from a directional standpoint, it really, in terms of initial margin and those types of things, generally is similar to go short the position as it is to go long the position, meaning long the futures contract or short the futures contract. We're looking for directional movement in either case. Now, that being said, that's different from trading equities, right? And that to a certain extent is different even than, see, here we go. Now it's coming back up to this side. So, all right, since I haven't put this trade together, I'm going to do this. I'm going to go, okay, so maybe this is being reactionary, but that's kind of what trading futures on the short term is a little bit of being reactionary. So what I'm going to do is I'm going to draw this line of resistance here. And now I'm going to say, fine, this is going to be our entry now, bullish entry to the upside. And I'm going to look for this to move back to that resistance level. And then this is going to be our stop. So we're going to take that stop off, or take this trade off if it goes the opposite direction. We'll come back and James will take a look at the market, what's going on in the market here in just a minute. I want to put this trade on, then I want to look at another trade that I've already put on earlier this morning. So if this fails, here's what we're going to do. We're going to make this a buy stop. And remember that buy stop is going to get worked as an exchange designated limit order. Buy stop orders, sell stop orders, same way. So we're going to make this a buy stop. So what I'm going to do is I'm going to come over here and I'm going to right click and I'm going to do a buy custom with OCO bracket. And we're going to say, all right, where do we want to get in? So we're right now at 0.00643990. So I want to say, all right, I want to be in at a buy stop if it breaks above 0.00644116, We'll go 1.5. I'm fine with 1.5. We'll make that. That's going to be a stop. It's going to say stop, wait, don't do anything, because if I were to put that order as a limit order, even though it's going to get worked as an exchange designated limit order, as a limit order, it's going to define the range in which I would potentially get filled on this trade. This order, making it a buy stop, says, wait, stop, don't do anything until that price gets met. Then submit this order as a market order, which is then going to get worked as an exchange designated limit order. Now I'm going to set my target up here at 0.006459. So we'll just change this to 0.006459 is what we said, 6459. Okay. And we're going to make that good till canceled. That's going to be a limit order. So that's not going to suffer from that. We'll make that 6491. Okay. And we're going to make this a stop. This is going to be our stop. And we're going to make this a stop limit. We're going to define the limit on this trade, 64337. So we're going to make this stop a stop limit. And the stop is going to trigger at 00. Let's make this 0.006. We said, here's our stop, 64333. 4333. That's going to be our stop, and our stop limit, the limit that we're willing. So remember, when we put a limit order, when we put a stop limit order in, there's the potential that this could gap around that stop limit, or it could move around that stop limit if it's a fast moving market. So 0.0064, and let's make it that limit right here, stop, and limit down to 64285. 285. Okay. Now we've got that in place. We'll make that good till canceled. We'll confirm and send. Our initial margin requirement on this particular trade to go long or to go short in this case is $3,080. And we're going to put this in our futures group. We're going to make sure that this is what we want to do. Click on that, and we are just about at that point. Click on send. And now when this, if price breaks back up above that entry signal, that line, yeah, and I did change that. So I changed the stop to good till canceled. And now, so the reason I'm making those as good till canceled, but I'm not making my entry order good till canceled, is this could change drastically. I don't want to just leave this order hanging out here if it doesn't fill for me, because then we could, not something you want to leave sitting around like that. Now, I want to pop over here really quick. I just want to go, for those of you who are brand new, we kind of ran through that quickly. We'll do a couple more examples like that. But I wanted to go over to the left-hand side of this chart. This is the 1-year daily chart. And I wanted to go through the information here on this particular display and talk through these ideas. So the minimum increment that this price moves is that tick size. And it's 0.000005. And so that means this 5, that 5 is our significant digit. And it moves in 0.000005 increments, which means that this is going to move from 0 to 4 and, 0 to 5 and 5 to 0. The tick value, every time that ticks, that's $6.25. Every time this point, to the left of the decimal moves, that is $12,500,000. It's a pretty significant notional. So we take that that point value times whatever is displayed, whatever the value is of the currency at the moment, and that gives you the notional value of the contract, or what the exposure is in this contract. So the initial margin is going to be a percentage of that. And you can see that we've got about a $3,000 initial margin. If we click on the little drop down arrow and you go to the futures tab, you can see on any of these futures symbols, here's our Japanese yen futures right here. Click on that drop down, and you can see what our initial margin is. In this case, initial long margin, initial short margin, the same in these futures products. So there you go. And you can see those specifications. One other thing, if you wanted to see what those specifications are, you can pop over here to the Analyze tab. And you can come over here to Fundamentals for the Analyze tab. And you can see the contracts. And you can see the things like the last price for the contract. You can see their expiration date, days to go until expiration. You can see the current bid and ask for each one of those contracts. You can then see when the last trade took place, or when that last trade would be, when that contract would finally stop trading. And then you've got your margin requirements. Now, oftentimes, you're going to see that all of these initial margins are the same. Sometimes, if there is a disparity in prices between expirations or deliverables, sometimes happens in the energy market, sometimes happens in the precious metals market. There may be differences in those initial margins on different contract expiries. You may see some differences there, but for right now, and that may be because of volatility and so forth, but right now those initial margins are going to be the same. But you can find that here. Oh, and by the way, you can also see all of those other pieces of information here in this fundamentals section. Analyze tab, fundamentals, futures symbol. Then you can see what the product is, what the multiplier is, tick value, minimum tick, whether it's settled as financial, meaning settles to cash, or settles as a physical. And so there you go. Now you got, is it optionable? What its trading hours typically are, all of those things. And you can even trade it right from this platform, this part of the platform as well. So we go back to the chart and we'll go to our right-hand chart here. We're pretty close. It hasn't traded yet, hasn't hit our buy stop yet. So it's kind of sitting right there. All right. The other one I want to look at really quickly here is /RB. This is RBOB gasoline. And got into this trade a little bit earlier. And again, similar type of scenario. So I'm going to pop my two charts in this grid back up. So RBOB gasoline, again, here's the thing. We've got a partial government shutdown. Hasn't started to impact the airline travel industry yet, but it did last time. So what I think you're starting to see, and what that did is it spiked gasoline prices up a little bit because there was a significantly higher demand for gasoline during that time because you had people who weren't flying, they were driving. Plus, it was a time when there was generally higher demand going into that wintertime or that holiday season anyway. Now, that being said, if we have a partial government shutdown that starts to impact the travel industry, the airlines, through TSA and FAA furloughs, that could drive, and again, I mean, it's a tenuous relationship, but it could drive gasoline demand higher. Now, obviously, we're trading this on a shorter term basis, but there does seem to be in the short term some increased demand for gasoline in the near term, meaning we're seeing /RB, plus it's cold, right? /RB, the RBOB gasoline futures contract has been moving higher today. So I entered this example trade on a breakout of short-term resistance here. I was looking at this kind of bouncing into that resistance level, broke out, target is up here, and that target is coming off of this level right here. Let me show you right here on this chart. That target is coming up off of the midpoint of yesterday's candle, which was a big downward candle. That midpoint of that candle, remember we talked about support and resistance levels. Support and resistance levels can happen intraday as well. For some of you, that might be what's referred to as R1. Since we're below it still, R1, the midpoint of a big candle like that, if you're using things like pivot points or just looking at traditional levels of intraday support and resistance. And you can see that the trend strength here to the upside is pretty strong. So we got into that contract. It's been moving in the direction that we want it to go. I've got a stop down here that is a little bit less than equidistant from our entry. What we may do now that we're in the trade is we may just simply, let's do this. I'm going to show my orders here. Click on apply and OK. What I may do is move my stop limit up here in this trade and adjust this trade. Now that the trade has been moving, is move that stop limit, say for instance, up to this level. Oops, let's do this. And this is one of the great things about the Thinkorswim platform is that it allows us to make these changes pretty easily. When I say easily, don't mistake that for this being easy. This does take some understanding of what we're doing. So I'm going to take this stop order and I'm going to move this stop order just by clicking and dragging it up to that level where that resistance level is. Now I'm going to release it, and it's going to give me the opportunity to replace that order with a new order. And I'm going to click on send. And now my stop order has moved. So what I've done is look, remember, a stop order is not going to necessarily guarantee that you're not going to have risk in the trade. It's simply going to not even necessarily define where the risk in the trade is, but because this is a stop limit, we placed it as a stop limit. The price could gap and move around that level. So there's the possibility that it could take a move to the downside pretty darn quickly and go outside of that range and not fill. That presents position risk to the downside. But what we've done now is we've moved the point at which that circumstance might occur up. So we've reduced theoretically the potential theoretical risk in the trade by adjusting where that stop order is from where it was down here to where it is now. So we could just take this and we could just move this letter designator that I've put in there up there. Now there's where our risk to return potential looks like in this case. All right, let's pop over here really quickly to the, I'm going to click on my grid list here, and I'm going to come down here to the futures grid, and we're going to take a look at what's going on in the futures grid here real quickly, just with the market, and then we'll go down to the time frame, because I know that a couple of you had mentioned, hey, why is the SPX, why is the NASDAQ, why are they both selling off at the same time on that shorter term chart? So we started the day up a little bit here, and or a little bit of a gap down and a rally on the S&P 500. On the NASDAQ, it was a little bit of a gap down and a rally, but it's kind of fallen again here as well. The small caps, the Russell 2000, those are starting to rally a little bit. We may come in and take a look at that here in just a second. But let's come back to the S&P 500. Let's change this to time frame wise. Let's change this to a 5-day, 5-minute. And we'll kind of see what's going on. So this occurred very closely after the cash market opened. And again, I don't know what the news is, but we're seeing that here on the /ES, which is the S&P 500 E-mini futures. If we change the NASDAQ to that 5-day, 5-minute. So what I suspect this is some sort of news announcement, right? And that's where having a reliable news source, say for instance, like the Schwab Network, which you can access here on the Thinkorswim platform. Schwab Network brought to you by our media affiliate, Charles Schwab Media Productions. That can be an effective tool to see what's going on. So it certainly seems at this point as if there is some potential downside catalyst that is moving those markets to the downside. So very likely, given the fact that it is both NASDAQ and SPX at the same time, that's very likely related to some form of technology, technology sector, because that's maybe that crossover that is influencing this move to the downside. Small caps still moving up. Let's take a look at what's going on at small caps in that short-term time frame. So as those, well, it's starting to sell off a little bit as well, starting to sell off back to its quicker moving averages here. So it's doing that but without a lot of downward momentum here in this particular case. So we'll see. Yeah, so huge spike up. Yeah, I don't know. I mean, that's the thing about news. We don't know what the news is and what's driving market movement. News is news, and when that news comes out, and how the market reacts to that news is kind of the unknown quantity, right? The X quantity, the X factor here. So starting to see that little potential bounce. Let's do this. Let's pop over to our futures grid again. And that may be what's keeping this Japanese yen under that buy stop entry point. Let's come over here let's go to our list of futures contracts. And let's come down to our minis or our micro contracts here. And let's go to our /MES. So initial margin in this contract, 2,303. So let's click right here, /MES. Starting to see that selling off a little bit here relative to. So I'm going to pop back to our both of our grids here. I'm going to just zoom in a little bit and kind of look for an area of, if we look at these last couple of candles here, where is there an area of support, perhaps, that if this breaks below that level, that becomes a more significant issue. So what I'm going to do is I'm actually going to go down, kind of find the lows that make the most sense, and kind of go right about down there. And if we squeeze that down, we can see how far down that might be. Okay, so that is right about on the big index, 68.89, 69, 68.90, 68.80, 68.90 is about where that is. Yeah, so gold and silver going back up as well. So here's what we could do in this particular case. So now let's come over just to our right-hand side chart. And we can see that this is kind of flattened out. We've got some momentum, some pretty strong momentum to the downside. So what we could do is we could say, all right, here's our level of what was previous support. And we're going to put that in here right at the 7,007 level. That was previous support, got broken. Now this is moving to the downside. So we're going to target this down here at 68.90. So what I'm going to do is I'm going to look at putting this order in. So what I'm going to do is I'm going to say, fine, I want to get below the low of this candle. I want to go 69.69. So we'll it's getting there. So I'm going to put that right there. So right click, whoops, sell custom with OCO bracket, 69.69. We're currently sitting at 69. We're already there. No, not quite there. 69.69. I'm going to make that 69.69 even to get in. And we're going to make that a sell stop, right? Because we put that in a limit right now. That's going to sell at that point. So we're going to make this a sell stop to get into the trade. Stop. Wait, don't get in until it gets to 69.69 because we want confirmation. If this bounces and goes back up, I don't want to get in. So we're going to say that, all right, fine. Now, in this particular case, we might say, fine, I don't want to sell it. In this particular case, we want to maybe define the range in which we want to sell this. I don't want to sell this if this goes below, say, for instance, 69.75. So I'm going to make this a stop limit order. We're going to say, fine, get in at 69.69. Don't get in if it goes below 69. Let's go 69.60. We'll give it a smaller range there. And now we're going to target our entry 68.90. So that's going to be, all right, buy it back at a limit price of 68.90. We'll make that good till canceled. So remember, we're selling this, so we're going to short this contract. So we want to buy it back as cheaply as we can. So 68.90 says buy it back at this price or less or better, basically. And we're going to stop this if it goes to 70.07. So we're going to make this a buy stop, right? We're going to make this a buy stop. Say buy it, stop. Wait, don't buy it until it gets to this price or better. So we're going to say 77. And we're going to make this a buy stop limit in this case, just like we did with the sell stop limit. Now, we could let that work as an exchange designated limit order, but I'm going to practice putting in my own limit order here. And so I'm going to say, fine, 7007, and I'm going to give it 7007.50. Actually, I'm going to go to 7008 as my limit. So we'll do that. We'll go 7008. There we go. 8 right there. 0.00. We'll give it 1 point. We'll make that good till canceled as well. We'll click on confirm and send. Read through this order. Make sure that this is what we want to do. We want to sell that to open. We want to buy it back if it goes down. We want to buy it back if it goes up. There's our transaction cost. There's our initial entry margin into this trade. We're going to click on where that goes. We're going to put it in our futures group. We're going to click on send. And I want to show the orders right here as well so that you can see what those look like. There's our resting or waiting order here to get into the trade. Sell it if it goes below that level or that range, and then buy it back here, or buy it back here if it goes up against us. Yeah. So we're talking about Mighty Mouse. Is a conditional order? Does a conditional order work the same way as a stop order? Depends on how you structure the conditional order. That conditional order may have additional conditions on it, like time frames, may have a specific price at which that order gets triggered, and then you can designate at what type of order that gets submitted. You can even trigger a conditional order based on something else. So if you're trading a pair trade, or you know that one instrument is highly correlated to another. So for instance, we could have taken that Japanese yen conditional order and made the entry into that trade, or made the exit out of that trade, conditional upon U.S. interest rates moving in a particular direction. So conditionals can be as limiting or as loose as you want. Problem is, when you start adding additional conditionals, those are additional factors that need to be met. So if you want the order to fill, there's always that balance between getting the order filled and not having the order filled. Right. So, and it looks like we're short now. There it goes. It triggered our order. We're now short this contract, and it's moving to the downside. Now, here's the thing. We're trading this as a short-term trade. I put those orders on those exit orders, the limit order and the buy stop order. I put those on as good till canceled. But, I mean, if this, I don't know, that becomes a question. How long do we let this continue to run to the downside? Because here's the thing, and this is one of the concerns, right? Unless you're just trading purely futures, many traders, I don't know all traders, and I don't know most traders, I know many traders. Many traders have long stock portfolios. This trade is benefiting from that SPX index, which incorporates a lot of stocks, 500 of them, going down. So betting on the idea, trading on the idea that that index is going down may suggest that the shares of stock that a trader may have in their portfolio are also going down. If we go back over here to the monitor tab, let me show you what I mean. Go back over here to the monitor tab, and I look at this and I say, all right, you know what? Look, even just in this particular portion of my portfolio, I've got a whole bunch of stock positions. I'm gonna move this out. Let's see, open that up. Let's move these out. No, let's see. Can I move that out of that grid? There we go. Move to grid. I'm going to move that to my index options group. Okay. So now, I've got a number of long stocks. And if I look down here further and I look in my stocks group, I've got tons and tons. These are for example purposes. These are illustrative examples. But I've got tons and tons of long stocks here. So, generally the bias that I might want to have if I were long stock is that I want the price of those stocks and the index as a whole to go up. But look at this. So if I were to beta weight this portfolio to the S&P, actually let's beta weight it /MES so that we're talking apples to apples. So this portfolio, this portion of my portfolio is essentially long 104 shares or 104 deltas of the /MES, the one that we just traded. And we would just went short the MES, right? So what I want to do really quickly here is I want to go to my futures group, and here's our /MES that we are short. So what we've done by going short one contract of the MES, if I move this to my group, I'll move this to my beta weighting group. And now you notice what I've done by adding that short position in /MES, which is gaining value if the MES goes down or the S&P 500 goes down. That reduced my long exposure by about 5 deltas. Now, let's go back to the chart for just a second. And let's go over to this chart right here. What's the point value of this particular contract? 5. We take that $5 or that $5 point value times the price, and that gives us our notional value. So how do you know for one contract, how do you know the impact that it's going to have on the deltas of that product, or to beta weight your portfolio? Look at that point value. That's going to tell you the amount that one contract impact is going to have on similar deltas in your portfolio. So go back over here and say, all right, fine, I reduced that portfolio by 5 deltas. I've reduced the sensitivity. So this futures contract that we bought or that we sold to take advantage of that downward movement is essentially hedging some of the long risk in this portfolio. But at the same time, if the portfolio were to start to run to the upside, leaving that futures contract on may attenuate gains that we could make in the portfolio. So you got to be careful. You got to be aware of what the impact is of the futures trades that you place relative to equity positions that you might have in your portfolio. Remember, anything that we're talking about here is simply for illustrative and educational purposes only. All right, a lot of stuff going on. Let's do this. Let's pop over here really quick. If you want to learn a little bit more about trading futures, this is a great place to go. So come over here to schwab.com/futures. And this gives you some explanations about margin. It's going to give you some explanations about futures margin, futures contracts, how to trade futures. It's going to give you some explanation about why trade futures through Charles Schwab, what some of those futures markets are. And it's going to lead you to some educational content like our live events, like these webcasts, like some specific short videos that may be helpful for you to learn a little bit more. Now, if you've got a specific topic that you want to learn about, come over here to the Trader Talks webcast page and type in the word futures. This is at youtube.com/@Trader Talks webcast. And now you can see our entire playlist of futures content. You can see long and short futures examples, building a futures strategy across multiple time frames, trading futures on the Thinkorswim web-based platform, calculating possible profits and losses. So a lot of that content, if you wanted to come over here to the Trader Talks webcast page. I just have one simple ask when you come over here. Click on that subscribe button if you have not done so already. And that's going to keep you updated in the loop on here. Do me a favor also, give us a follow on X @BenWatsonCS, @ConnieHillCS. You can also find me over on LinkedIn. Connie will be there soon. But again, on LinkedIn, I'm @BenWatsonCS, so you're going to see me over there as well. So good stuff today. Hopefully you enjoyed and found some value in this particular webcast. Coming up next, I think we've got, let's see, let me tell you who's coming up next. I will tell you in just 1 second who is coming up next. It is going to be James Boyd and his Investing Master Series at 11 a.m. Eastern time. That's what's coming up next. So you will see then throughout the day, you're going to see Cameron, and then you're going to see Rachel and Barb and Mike and Kevin. It's going to be a great day of webcasts today. Guys, have a great day, everybody. Thanks to Connie Hill for helping out. We'll see you again very soon. Take care, everybody. Bye-bye.